Join us this week as Alex Tolene radiates excellence and brilliance. Iran, deal, no deal. It's like Howie Mandel with the terrorists and Trump on each side. Every day we got a whole different headline. What's the market impact? Well, stay tuned. Why is the market up so high if we're at war? And what do you need to do in your portfolio? That's why you want to tune in or be a victim for the rest of the year. Welcome to the June 1st, 2026 Advanced Report for McGowan Group clients. Each week, the weekly wrap-up of what happened in the markets and what we're doing about it and what you need to be scared of in the year ahead. That's why you want to subscribe. Alex will tell you what he's scared of. Alex, walk us through the program title and what we're going to cover.
Yeah, so big news every week seems to be Iran, deal or no deal. What are the...
Howie Mandel.
Yeah.
It's like the show.
You got three suitcases. Which one do you want to pick out of?
Not the nuclear one.
That's right, right, yeah. Financial economic impacts of the headlines. What is FEMO? According to Ed Yardeni of your Yardeni Research.
He's smart. He's really smart.
What are the implications for portfolio strategy? That's why you're tuning in. When should you do tax loss selling to reduce capital gains taxes, particularly when markets are all-time high, even if you have some tax loss selling opportunities? And what's the January effect? And how does that set up trading opportunities in December? That reminds me of Papa Dean's year-end trading package.
Yes. Okay, so let's cover this first because this is a trading strategy, right? Tax loss selling. Everybody, right about December 15th, decides I'm going to sell the losers. As a matter of fact, I picked out two great tax-exempt funds in the last review I did with a client. So people aren't happy because price is down. Everything else is up. You got tax, gains, and you want to offset some of them with the loser. You look at everything that's not up, and so you're going to dump it on December 15th. Well, we're at new highs right now. We might not be on December 15th. So if it ain't working now, probably ought to go.
Probably ought to sell some.
And we're building a war chest for the next time there's a crisis. Remember, this year's crisis, Epic Fury began. We're about to show you that. Last year was the tariff meltdown.
That's right.
And what happened? Those turned out to be the best opportunities of the year. Now, tax loss selling. About December 15th, everybody's dumping the stuff that didn't work for the year. And you find those bargains because tax loss selling ends when? New Year's Eve. The January effect is a documented effect that the stuff that's actually good stuff that got pounded.
Right.
I've actually made money in bad stuff doing this. But, we want the good stuff, right, that we would hold forever. And the tax selling pressure abates. You don't have any sellers for about 3 weeks, and you can get off to a good start, and we're already picking those out. That's why you want to go to networthradio.com and click Contact Us and set your time. Alex and I and Andrew and Harrison and the team are going to walk you through how to upgrade your plan, networthradio.com. All right, so you want to get started on the rest of the stuff?
Yeah, so I want to cover one last thing. So when should you do tax loss selling?
Now.
Right now.
When your markets are at new highs and the wind's at your back. So that's where, if it ain't working, you really need... Just a second, Alex. I got technical difficulty. Here we go. Whoop. There we go. Okay, I'm back in action.
All right.
Now, this one, explain this chart and I'll do the cursor.
Okay, so this has basically been a pattern this year. Oil goes up, markets go down. Oil goes back down, markets go back up. And that's where we're at right now. We started the beginning of Epic Fury, a low of $71 per barrel of oil, peaking at 113. That's a little after April 7th about.
Look what happened to the Dow.
Dow went down about 10%. And
oil up, Dow down.
That's right. recovery through the rest of May to where we are now. Oil sitting around $88 a barrel.
So this was a big decline. There may be a little more to go here.
I think so.
Yeah, unless something bad happens.
That gets us to FEMO.
Oh, well, let me skip to that and we'll come back.
All right. Ed Yardeni has coined this year.
Yardeni's smart. You can Google Yardeni and his research just comes right up.
Yeah.
He is the best at forecasting earnings out of anybody that I've used over the last few decades.
So he came up with FEMO, not FOMO,
He
but
must be
FEMO.
really old.
Forward earnings momentum.
Instead of fear of missing out.
That's right.
FEMO, forward earnings momentum. So explain this. Let's start right here. That's a big one.
That's right. So earnings growth, we just have about everybody reporting the S&P 500 over 27.5%. Sales growth 11.5%. We haven't seen earnings growth like that for a long time. If you look at the bottom
sales growth like that too.
Yeah, if you look at this, the trend says that sales and earnings are expected to continue to be pretty good throughout the rest of the year. Ed Yardeni has a target of 8250 on the S&P 500. Implication is potentially another 10% gain for the year.
That's what Ed said.
Yeah, that's what it said.
Okay. I think there'll be some trouble in between that. You know what's great is you get this forecast, you're like, oh, S&P 500 is going to 8250. And you're like all in. You're like, oh, I get another 10%, I'm all in. And then all of a sudden, Trump starts tweeting and you go down 10%. You're like, well, that was a bad forecast. And so you sell it out. And so these forecasts, you got to remember, it's not a straight line and the forecast may be wrong.
That's right.
Here's the other financial market impact, because that's what we promised to cover.
Okay.
All right. Tell me what this is.
So this is interest rate. This is the 30-year bond rate. Started Epic Fury at 4.65%, going all the way to 5.2%, settling back down just under 5 at the end of this week.
If I knew there was going to be a recession, that's not a bad place to hang out at 5%.
No, it's not.
That's because it would go up if interest rates go down in a recession.
That's right.
So at some point, this gets attractive.
There's a lot of talk about what happens next, right? If the Iran deal doesn't happen, this extends for a while, then you're going to get elevated oil prices again. Markets will soften some. But I think the bigger story in markets is that the earnings are fantastic.
Except for, I want to point this out. You got Mark Cuban and Trump, and they actually were together on some sort of thing.
Oh.
Right?
Okay.
About healthcare. And so they both came out with, like, Mark Cuban does what, cost plus drugs, and Trump's got Trump RX. So they're kindred spirits, even though Mark Cuban is like a Democrat.
Right.
And so, he doesn't hold it against him. But what they're saying is the margins are so good, right? Mm-hmm. You can make money at just cost plus, and that'll undercut a lot. The other was the mandate globally that if you sell it over here, you got to sell it just as cheap in the United States. I don't know how he's enforcing that, but minus 3%. That category has some trouble, I think.
Yeah, I think it will, as long as you have policies coming out that are really geared toward bringing down prices. Great for the consumer, not so great for the companies.
All right, so that's the only bad one here. Energy's not that good yet. So that's all I had to say about that.
I think you'll see it all in the second quarter. That's my prediction.
Okay. Well, I'll just make an observation. So here's the low on the Dow. This is Dow year to date, up 6%, now at 51. Notice Epic Fury correction. Head-Fake, like the Trump tariffs.
Yeah.
Because the underlying economy was good. And if you subscribe, when we get bad news on the economy, we're going to cover that too.
And usually you'll start seeing it show up somewhere, right? Atlanta Fed GDP estimates. That's basically an algorithm. As new information starts coming in, it updates as it gets it. We got 1 month left in the second quarter, and that number is coming in. It was above 4, now it's about 3.6.
3.6. So it's not a recession yet.
No.
And we're going to cover something about the premise, because remember, the financial media has been working overtime, especially the ones that don't like Trump, right?
That's right.
And they did this, of course, during Biden. From the right, they were beating up on the economy when actually things were okay after COVID.
Yeah.
It was getting better. So they weren't looking at the real data. Now, NASDAQ 100 up 20% so far this year.
That's an AI tech rally right there.
Man, that is huge. And so we're going to cover a couple of those that drove this big gain, because the chip stocks, I mean, all of a sudden said, well, if your AI is going to work, it's got to have a lot of data.
It's got to have memory.
You have to put the data somewhere. Well, look at Micron.
233% year to date.
They were dead in the water. So what happened to Micron's earnings? Let's go back. They were making about $8 a share.
They're making $8 a share. The estimate for 2027, when we initially looked at this a few months ago, was about $50 per share. In the last 2.5 months, that 2027 estimate has moved from 50 to 104.
Well, not a recommendation for your portfolio till you come down and get a plan. Just because we talk about something, and I'll point out that you missed a big gain.
Yeah.
So everybody's fear of missing out and wants to chase things.
Do not chase.
This is the time that we're starting to build our war chest of a safety reserve for the next time that Melania doesn't take Trump's phone away and he starts tweeting stuff, and then we'll be prepared for some bargains. Whoa! Round Rock, Texas-based Dell Technology. Michael Dell, that guy knows how to build server rooms.
They're doing fantastic. Fantastic.
It was up 30. Look at this. 33% at the open on Friday. 45% earnings growth. Earnings are supposed to triple next quarter versus the year prior.
Now, if you tune into the show and have watched this on YouTube, you'll remember we were talking about Dell a year and a half, 2 years ago.
12 times earnings. He had a dividend.
It was just
deep value.
It was super cheap. All the NVIDIAs and all the other stocks were taking off. Dell was kind of left behind, it seemed like. Well, they've caught up. So deep value, alive and well. And when you have moves like this, you want to take a little off the top. We call that the fruit and the tree. Harvest a little at high points.
I think, if you want a pay raise from stuff that pays real cash flow, I think that tax loss selling is going to be good because people are taking profits and stuff. And so you want to trim the big spikes.
Yep.
Right? Trim. All right. Let me explain this chart, okay?
Well, first of all, this is Best Buy. This is a big box store where people go and buy stuff, right?
Right. And I was talking to a smart client just before this, and he said, well, I don't know, because I wasn't recommending Best Buy. I was just notating something that happened here.
Right.
This is more the psychology of the current market and epic fury impact. All right? So Best Buy, because Amazon ate their lunch.
Sure.
But anyway, this trend right here, notice here's epic fury begins. Okay?
Right.
Right in here. And the gasoline-driven consumer recession. Gasoline's going to be $5 a gallon, and consumers aren't going to buy anything. Though we keep hearing that. Well, I think there were some short sellers that actually believed that. And the earnings came in for Kohl's, Best Buy, Dollar Tree, but Best Buy is our example. Boom! That happened this week on Thursday. You know what their earnings were? They were boring, but they weren't bad. Okay? So they weren't bad. So this premise that the gasoline-driven recession is already underway, and affordability and all that stuff, it's a narrative. You want to look at the data behind it, because everything
looks fine there.
They looked fine. So this premise, was it true or not true? Whoop, not true. At least not yet.
There you go.
All right, tune in every week, subscribe, and we'll start to tell you when we see signs that something's bad, but we're building our war chest from profits and income right now, so that we can deploy to future bargains. Thank you for tuning in. We will be back next week with the best in financial news. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.